Hello, everybody, and welcome to the latest edition of the Plus3 Futures and Commodities Show. My name is Ben Maldonado, and as always, I'm here with my partner, Barrie Hederachi. How we doing, Barrie?
We're still standing.
A little dizzy after all the up and down last
A
week?
little dizzy, but on 2 feet. So,
Excellent. Yeah, we got a lot to talk about. Some interesting developments in commodity land, which we'll review. And Barry will run through the big five, but first let's quickly look at Bitcoin. Well, we found a low on Bitcoin exactly where we'd expect it on the half square here. Almost a perfect hit on that half square, completing an ABC. Now we've moved up, not super aggressively, but listen, we're up off the lows. Again, you can see the size of these bars, big up and down for most of the week and going nowhere, ended up in the same spot, which is kind of the story of the equity markets too. I'm sure you're going to talk about that when you review the ES, but truthfully, Bitcoin seems to be leading here. It made its low before the stock market a couple hours before. And so I'm watching this one to see if it gives us any clues as to what's going on. I also did something, we were talking a couple of shows ago about that 69 calendar day cycle to the low.
Yep.
And I'm saying, listen, if we got a regime change here where the market's topped, Bitcoin topped, the Fed, the Fed is now tight when it was easy during this whole thing. If we did now 69 up to match the 69 down, it puts a high in early April, which coincides with some other cycles we have. So it bears watching. This is all experimentary. I'm just messing around with some timing here. Let's see what happens with it. But I wanted to put it out there so you could see it. What do you think about Bitcoin here?
Well, the low definitely came in on support with a nice ABCD to finish it up.
Mm-hmm.
But I think it's in a weak position below that full square.
No question.
Well, and what value is that? It's at about 42 or 43 something.
Where we topped so far?
No, the major line right there.
The major square, is up around 41.7, 42, 41.8.
So I think that's the key level. There's a ton of overhead above that. So, and although it looks very clean, the move down, very, fairly decent.
Mm-hmm.
I just feel like it's not done. So we'll have to wait and see. I mean,
listen, I'm with you.
And that's just kind of going by, the feel of the market. But we'll see what happens at the full square. If we snap above that, okay, fine.
Yeah, then
But
the picture changes.
If we start rolling over there, I think we got new lows coming.
Agreed. And these got to be super tempting to come clean up these lows here too.
Exactly.
I can't believe they would leave those alone by stopping right where they did.
Mm-hmm.
And structurally, if you look at it, we haven't even tested these lows on this eighth line here.
Let alone the full square. Right?
Let alone the full square. Yeah. So a lot will be told if we can get up here or can't get up here. A lot will be told. The price action here. This clearly is for this chart is the bull bear line, right? You get above that and stay above it, clear it. The story has changed.
Mm-hmm.
You're below it, you're vulnerable. You continue to be vulnerable, just like we were vulnerable here when we were below this up here. So we'll see. We'll see. Let me throw it over to you. Let's quickly run through the big five and all the seasickness everyone got from the big up and down all week.
Let's take a look at that.
It was a nice save on that full square, wasn't it?
Yeah, that was and we talked about that. I think last week we talked about it coming down and possibly making a false break. Mm-hmm. And that's exactly what it did. But what's suspect here is often after a false break, you need a fast move. And here we really didn't get one. What we got was a runaround. So basically 4 days of just spinning, right? And that's not a good, that's not the thing you really want to see after a decent false break. So I'm a little bit suspect about this low, but we'll have to wait and see. So far it came in online. Everything's okay, right? Nothing to really complain about. But let's talk about levels. We left off talking about some of these levels up above, and clearly none of it held. We couldn't get above 44.90, just completely sold off after we talked about it last weekend. So let's start from the bottom and just set up what we're looking for next week. Okay, so the lows came in, we had support from a number of different ways. So I think the support is okay. It's not like there was no support. But so 42.75 is sort of the support area we're looking at.
Mm-hmm.
And that, it held okay. And there's a number of different ways that came up. But I think this 44.23 area right there, this blue line, is going to be sort of the telltale, and it's already there. It's already, you can
testing
see
it. Yeah.
You can see how it's already holding below that, which happens to be the quarter of this, quarter up from this low, 11.25 degrees up from there.
Mm-hmm.
So 43.23 is a level we're going to watch to see if we can get above and hold above it. And that would clear off the bottom, right? Not that we can go up and come back and, retest maybe 50% of the range or something. All that madness can happen. And I think there is chance for that to happen. So we have to watch this. I don't think we're, like I said, this is not the action you normally see after a false break. So it's suspect, but we'll use the levels to see how we do. But I think, it doesn't mean we couldn't go a little higher next week. So let's watch this. The level after 44, so basically 44.23 and the 42.75 is the bracket. It ends up becoming the bracket that we have.
Mm-hmm.
So let's say we clear that. So what's the counter trend sort of resistance? It's really between 44.70 and 44.90. And
it's funny you say that. My full square is at 44.80 that we got to get over. So,
all right, so
right there.
So I just punched in 44.80. Let's use that as sort of a secondary clearance to continue higher.
Mm-hmm.
That's a fair level to look at. And the major resistance above is really between 45.40, 45.50. So let me just punch it in. So we'll have that 45.50. Let's leave it at that.
Mm-hmm.
So these are the three levels to watch for next week. And we're going to see if we can sort of hold these levels after we get through them.
Mm-hmm.
Just to reference back to the weekly really quick. Look, we if you guys are new, watching this show, go back and look at the, last few weeks. We've been talking about this high coming in based on this square 52. And it's not just that. We had almost a 90, I think. If you go back to the 90 square, you can see we had, 90 weeks up right into these, into the middle of these highs.
Mm-hmm.
So I think the cycle really came in at that, right around 90, give or take a bar or two. And then we had the false break on a weekly basis, and you can see how we get a fast move out of that, right? So 90 weeks, we came up there, and it was a 3/4
in price.
So it's legit, and that's why we were talking about it as it was happening in real time. And we basically called that, right? for
no question.
A number of different ways, and we looked for support at the half square, which is pretty much where it came in. And that would be around, 42.63 is what it comes up here. So, and what's interesting, Ben, I had that dropped in this trend line, to hold.
Perfect.
Look where it stopped, right? Exactly.
right on it.
I call those flukes. Right? You never know how that's going to work out.
Right.
But
nice when it does.
But these, the pullback looks like a normal pullback. If you look at this one, and if you look, there's a kind of a geometry there, right?
Mm-hmm.
And what I'm doing is making a case for a low to be here. It's possible that we did that. Okay, like look at that. You take this, you can see measured moves, right? So this is the idea of a measured move. And if you take this, it's the same square, so I'm not going to change it. not to get into a bunch of lessons here, but just to, cover the logic, right? So if you take that and go up here, we pretty much did that box.
Just about did it, yeah.
Right? Not exactly, but close enough for, kind of.
You know what, Barry? Thinking like a criminal. If we do a false break with our current lows, we'd probably make the box.
That's true. That would be what could happen next week, or a little bit later.
Mm-hmm.
But when I saw that and I go, oh, that matches just eyeballing it. But then if you look at this bigger COVID drop, right?
The double box.
And look at that. It almost comes up as a double box.
Right.
Mm-hmm. So it tells you we're kind of in the range for sort of nominal correction. Yeah.
Right. That's, and if the cycles did change like we think, it's good spot for the first counter trend, right? The first wave down.
Yeah, and so here's the other side of that coin is, look, if things have really changed, like we've been talking about at the high, we had a lot of big cycles that change, then this is not going to be a correction and we are back to new high. This is going to be sort of the ending, this is going to falter and we're going to take these lows out. That's why I wanted to draw this, right? So here we did the double. So it's possible we could do another double or triple, hey.
Yeah.
It's possible. But just to say, right now, it looks to the eye like we did a proportional, the correct sort of the proportion. And this correction is about half the size of that box. So you see there's some kind of a measured relationship in all these moves. And so the key here, the takeaway here is, if we take this box out, then we're definitely in a whole nother phase of the market.
Different regime.
Exactly. Yep. Period. Yep. So that's why I wanted to pull that out and take a look.
That's good stuff. Really good stuff.
And now going back to the weekly, daily. So daily, we talked about the levels we want to watch, and that's pretty much it for the S&P. I think.
It's good coverage. Good coverage.
Thanks. So, but I think obviously, we've always had these pullbacks after a low. There's one here, there's one here, one here. Mm-hmm. So it's possible we pump up a couple of days and we come back for a pullback, and that's when you really want to see, if the lows are going to hold. And for that, you guys can follow us on Twitter, or our handles are at the bottom and on the descriptions. And Ben's always posting stuff, so we'll be able to narrow that down, where that low comes in if we do get a pullback next week. Watch that. Other than that, that's it for the S&P. What's this? Well, here's the cash, and you can see the high came in pretty well on its square 72. Again, the low came in pretty much at the half square, right? So on a cash basis, like 45, 15 or so is where the counter turn resistance should come in, which held really well. That's 280 degrees from the COVID low. So that's a key level where we should be watching for next week. All right, done with the S&Ps. Moving on to bonds. Well, they're weak. That's all I can say. And I'm not really falling for this to be a low, because it's rare that we make a double bottom just so perfectly and just sort of dance our way out of there. If anything, we're probably going to do an ABCD up and see what happens after that, because the ABCD just goes right up into that resistance that we had drawn up in the box. And the resistance there is, let's just say, right around 158. So I would say, anytime, as long as we're below 158, the bonds are weak. I don't care how many drums are being played out there. And and on the downside, I think, let's put a new level here just for reference for next week. So around 153, around the low, there's definitely support there. That's why I stopped. But we want to watch that low and see what happens in the coming days. I have a feeling we're not done with that yet. So
the interesting thing about bonds is, I agree with you, it's still in a weak position. But with that big cycle we had changing, see how the the character of the move changed. We were heading down pretty sharply,
Hmm.
and then all of a sudden now we're going sideways. It's
Right.
not bullish, but it's not accelerating like it was previously.
Right. Right. And God knows everybody's watching bonds here, right? So
Yeah, yeah.
so
So
that's
we'll
it. We're looking for an ABCD up
see.
and to be weak below 158. I really don't see it being taken out anytime soon. So, and I think we'll probably have a retest of the lows or probably even go a little lower. So we'll watch how that plays out. But for now, it's weak below those levels. And looking at the weekly bonds, again, 159 here on the at weekly basis, what is the line that we've had, drawn up forever, meaning we wanted to see bonds above this really if it was going to rally. And we really haven't been able to, other than trying to hold above here, really couldn't get going. We were sort of tied up. And looks like the triangle we were talking about for weeks and weeks, broke to the downside. So the logical pattern play out would be, unless this whole thing is some kind of a bogus game, the idea is we're going to come back up and retest somewhere up here around 158 and then trade lower.
Mm-hmm.
So the key here is, again, holding 158. That would be the thing to watch. Anything you want to add to bonds? Are you covering bonds today?
No, I think you got it. What I was just saying is that the fast move has stopped. Now we got to wait for the next setup.
Exactly. Let's go on to crude.
Quite the week in crude.
Quite the week. And what's interesting, man, our numbers are just, knock on wood, been holding really well because, here's 82, right?
Look at that pullback.
Below that
right
we
to
got right on
82.
82 right there.
Mm-hmm.
And onwards. And we're looking at 91 being the next target. So that's very possible. I wouldn't write it off at this point.
We hit a lot of resistance at the high on my stuff, like monthly, weekly, daily resistance.
Yep. Resistance.
A lot of,
mm-hmm.
Yeah, a lot of stuff hit at that high on Friday for me.
My thing, just looking at the patterns, well, what I wanted to cover here was that we're, 180 up from the low would be right around, what's it, about 90, 96, 97. Mm-hmm. So that's, if you're looking at from that low, that's really where the next big sort of the resistance is.
Right.
And we'll have to look at it and deal with it when we get there. For now, what got me bullish, even though there is resistance above, is the fact that we squared out up here, we corrected nicely and we just took it out like it was nobody, nothing was there.
Agreed.
Meaning, we poked up, false break. Again, we had a chance to, sell off and with that false break, but we didn't, just held it right at 82 and started trading higher. So I think, 92 is really the next stop with, we're kind of getting tired in the trend here. So 90, 91, 96 being 96, 97 being the next resistance level. For now, I would just say, above 82 is clearly, it's in a strong position, but half square is around 84. So 84.50 or so above that, as long as we're above that, it's in a firm position to go up and test the 91 target that we have. Mm-hmm. And on a weekly basis, what are we doing on a weekly basis? Well, no, same thing, right? We squared out. Oh, that's right. We squared out here. And I remember talking about that, right? That was a big deal. And we got the sell off. And we just went right up like nothing happened and took it out.
Mm-hmm.
Now
and we're settling on top of it right now, too.
Yeah, and we're on top of it. So yeah, it's in a good spot. And if you look at the square 52, it's got little ways to get to second square, which is around $110. But what's also happening is, momentum's going to start waning here, and we're going to be looking at a weekly 3 drives to a high potentially. Mm-hmm. Right? We got 1, 2, 3, and maybe even a 1, 2, 3, 4. So clearly we're working 3 of them. Mm-hmm. So it's trying to be a little bit cautious. We're not on support now. We're way off support. We're pretty well extended. So watch those levels.
Yeah, I think a summary for me is it's not bearish, but you better look both ways before you're crossing the street right now.
Yeah, it's not bearish. You got to watch it a little bit because we're just right up against all kinds of resistance, right?
Mm-hmm.
But it's proven to sort of have the being able to push through.
No
Here's the other
question.
thing I wanted to show where, again, we saw this as 180 degrees off the daily charts. So 90 up on the weekly, you see it's right around 96, 97.
Yeah, get you in that same area.
Yeah, it would just, that would make sense to me that we go and tap that.
Mm-hmm.
So in order to do that, we got to hold those other levels we talked about. Looking at gold, Jesus Christ, should I even talk about that?
What a mess.
Well, it's a very precise mess.
Precise mess. That's a good description.
It's look at that. We had resistance at the half square, and we said, look, it really needs to clear this to get the upper leg, an uptrend going. What happens? It goes to 1853, but right up there, and bam, knocked down.
Right back into the box.
Right back in the box, and we couldn't hold above this 1832 we've been talking about forever, right?
Mm-hmm.
But we are.
It even gave us a couple days where it looked like it was going to right there, right? See those lows?
Totally.
Yeah.
But the deal here was, it just couldn't clear the half, right?
Nope,
and all we have is a little bit of overhead up here and over here. Just couldn't do it. Anyway, now we're back in the fork. I tell you what, the day that this fork goes, I think we can officially just kind of wait for the rally in gold.
Yeah, I agree.
Put that back on the shelf and just wait. But then again, look, that's exactly when markets take off. So, you just have to, that's why we cover all.
We have to be vigilant. They have to be vigilant.
It's exactly the point when, mentally you're kind of drained and say, you know what, I'm just tired of watching this market. And that's when they sort of start making the move.
Yep.
So the downside, we're watching that. So 1765 is really our sort of a drop dead level. Not really the fork. Fork is okay if you guys have it in place. It's been pretty well for months and months. But the 1675 is the level you really want to watch on this, and 1832 to the upside. So that's a bracket, and we've had that bracket there for a while, and it seems to be playing right along with it.
Yeah, the range is still in control there.
Yep. Here's the weekly gold. Again, look, we talked about market making higher lows, and so we do have higher lows. And till this one gets taken out, at least the push, the overall trend is firm, let's just say.
Mm-hmm.
And 1767 basis weekly is sort of the middle of that entire thing, and support, especially based on these this consolidation in 2020. So we'll see what happens. It's nothing much here to do anything. Just waiting for it to sort of find a spot to rest or to break out, and not much happening right now. Now, where things are happening would be the dollar, right?
Mm-hmm.
Again, we've been bullish for a second there when we took off this trend line on the half square. We paused, but as soon as it recovered the next day, we've been bullish ever since, and it hasn't let us down. It's doing well, and I think it's going to continue to be bullish. And we've been bullish for months and months. So I think this is it coming to some kind of a resistance area? Well, I think it could be, right? Mm-hmm. Because we got a quarter square right up here. So square wise, we got resistance around 98. All right. And that we have a number of things coming up at that point. So we're good there. 98 is resistance. And we can use the
third square, right?
97 as a key level to watch. These were the old highs, and which just happens to be the 2/3 of the square, 60 degrees up on this 90. So long as we can kind of hang above that and have the push to the upside, we can probably go and make 98. At least we have till 180 to check that, right? That will be end of next
February.
week. We'll have to reassess the whole thing because we'll be doing a 180 cycle.
Mm-hmm.
See, what we might find there.
Looks like it wants to push into a high into that end cycle.
Exactly. So here we have the weekly dollar. again, we've had this fork in place for months and months, and we've talked about half square, this square of 90. Half square would be this dashed line right around 95. That used to be our old target months and months ago. And we got above, the next resistance was the 2/3 of the square. And we stalled out for a month or so, pulled back right into the half square. And of course, last week we broke out of the fork and the whole bit. So, which, look, that opens up the 90, right? So
Yep.
that's up there. But I think the quarters we were looking at would be worth watching. And that's just coming right up around 98, like I said. And what we have left would be the euro, and the exact opposite happened.
Right.
Here's a little bit of a false run up, right?
And then they do the real move. Boom.
Which we weren't buying. So
right.
And came back in, and look at this, perfectly lower lows, lower highs, right through the half square. So clearly this thing's in trouble. And now our resistance becomes the 120.50 area, which is the half the square 72 and the second square down.
I mean, as long as we're below that half square, it's in trouble.
It's in trouble, yeah. Not only that, there's sort of a traction down here on the one around
110.
Yeah. So it's a short story. Looking at the weekly, again, look, the charts, if you guys have been watching it for a while, you'll see how the charts have been super helpful to navigate through all of this. We were looking for, we had support at the 1/3 square, which is this green line. And we were looking for resistance at the dotted line here, which would be that fork, or the half square.
Tested the half.
And that was it. So this is how it's supposed to go, right? Counter trend, bam, sold off, right? So it can't be done. I mean, I just don't see how that can be. We have to at least go a little bit lower, maybe 1060 or so. And then now look, now the half square is all resistance, right? All this is all overhead now.
Yep.
So it's I think there's more. I don't think the story's done yet. So there's more to go there.
Mm-hmm.
And that wraps up. Let's see, anything else? Well, here's a calendar day chart, same thing. Now we were looking for support here and false break. We got that. Here's a 45 or the 90-day cycle expiring. And that's what gave us the first heads up that there's a potentially we have a high in place. Not to mention NASDAQ not being able to move at all, right? Remember that? For days upon days.
I'll show the NASDAQ chart next.
So that's all I got. Let me throw it back to you. Wrap it up.
Okay. Good review. Very good.
Thanks. All right.
Speak of the devil. So here's the area, the section you were talking about where we just were having all kinds of problems getting over this square.
Right.
This was in that, 16.4, 16.5 range. And you can see the result when it finally gave up.
Mm-hmm.
The interesting thing to me is we found support on the lows on a full square here. Tested it multiple days. So it's a decent low, right? And if you look to the left here,
not bad.
We had all this overhead. So that, all this support, that from previous highs. So it wasn't a bad spot. But as you said, it's just not screaming out of here. Instead it's chopping.
Yeah. And the next pullback would be the key here. We'll have to see how that lines up.
Absolutely. The half square is the key. Obviously, getting above that changes the ball game, which is around 14,590. So call it 14,6. If we can clear that, just like when that level in Bitcoin, we clear that, we're in much better shape. Until then, you got to expect some sort of retest, and maybe they false break this low. Maybe they come back and just test this full square here. Who knows? But there's unfinished business down there still. I think they got some cleanup work to do. By the way, all the levels are on a spreadsheet on a Google Doc that we post the link to when we post the link to the new video. So it's updated. You can check out those levels if you're not sitting there with a pen and pencil and writing them down. They're all posted on that Google Doc. All right, let's jump into some of the commodities. You know, Barry and I were discussing this week. There was a weird transition going on in commodities. The grains were super strong all week, but the other ones were sort of mixed. And the sort of summary before we get into the charts is, you know, there's a correction coming, and it looks to be across almost all the groups of commodities that I follow. I'm going to highlight some for you, and show you some actual short setups that we're looking at in a whole group of softs. So it's a little bit different this week, but you got to go with what the price action tells you, and that's what it's telling us right now. The first one we'll take a look at is wheat. There's nothing bearish about wheat. There's nothing bearish about corn. There's nothing bearish about soybeans. But where we are in the chart and in the cycle, you see what we did here this past week. We made a spike high right on full square resistance, and a sharp reaction off of that. You could also say it was a false break with these other highs we had here, you know, since this, you know, sort of all-time high in November, or sort of swing high in November. So this reaction has been sharp. It looks to me like we are going to do some sort of consolidation / correction in wheat. I think it's still bullish. I think the charts are very bullish. The sort of the fundamentals for the commodity are very bullish. It's just this price action this week told me that there's going to be some sort of pause, some sort of consolidation, kind of like this one here off of this high. You can see we did a sideways correction for 2-3 months, pulled back, and then made a big move higher. Correction here for 2-3 months, made another move higher and a new high. Pull back here for a month and a half, move up to new high. It just looks like something like that similar is going to happen here with wheat. What's the wheat chart telling you?
I think if you take the idea of measured moves, it's done a normal correction, right, off the high.
Mm-hmm.
So I think it's just a matter of just waiting for it to choose the direction.
Yeah, to give us a nice setup, right?
Mm-hmm. And the low looks good. It pulled back nicely. Everything looks by the book.
So let's move on to the next one. Corn. Super bullish. We've been, you know, we were on all these grains, you know, September, October, November, talking about how, you know, the setup's there. You know, we had a nice pullback. This was a big correction, a multi-month correction. And we were on these things here at the lows. It looks like we are coming into the terminal point of this move. Again, not calling for a bear market, not calling for a huge pullback, just saying that corn does these kind of moves, and then it'll go sideways for a few months, and then it'll take the next leg higher. And that's, to me, it looks like what we're repeating here. We're coming into a potential ABC high. This week, if we square out, if we come up and hit this full square, or we do the ABC and start having a reaction, you know, I'll be looking to take some profit on some corn longs. I don't think anything's wrong with it. It's just this move is getting ripe.
Little long on the tooth.
Mm-hmm. What are your thoughts on corn?
Well, I think there are places to buy. There are places to take profit. And I think we're coming into take profit area, especially with that, you know, when you run into resistance along with the ABCD pointing right at it. So I think this is an area, so we'll have to watch that. Then again, you know, if we just kind of go sideways above that half square, it's still bullish. You know, we
still bullish.
Yeah, absolutely.
I mean, we have to look at the price action, and you have to look at the risk reward, and you know, everybody has different risk tolerance. I'm just pointing out some of the things that we're seeing in the grains that could sort of inhibit the upside, or say, hey, this particular cycle is done. Something else is going to happen. It's not a bearish call. I am long-term bullish on all the grains. And you know that from seeing the monthlies that we review, which we'll be doing again in a couple of weeks. Let's look at beans. Soybeans is a similar story, right? Risk reward here, a lot different than the risk reward here. So we were on this low, little early here, then here, then here, and now we've gotten the move. On Friday, we punched through this full square, and so far we got to close above it. I'm going to be watching. If we pull back and start getting stuck under this square, it'll be time to take profits on the bean trade, the bean longs. Could just chop around here, could continue higher. Again, beans is very bullish. Just we're getting long in the tooth in this move, and cognizant of that and looking at, spots to take profits. And this could be one if we fail at this full square here.
Hey, didn't beans also finish up in ABCD? Look at that. If you look at it from the main.
It looks like it. I think it exceeded it, actually.
Mm-hmm.
It's right there.
There. So corn's a little short of it, and beans are a little bit above it, right?
Mm-hmm. So you can see all three of them are kind of sending a message, right? That there's some pause or something coming here.
Well, that full square is a line to watch. What's that?
Absolutely. Absolutely. The full square is key. That's 1466 area, 1465, 66.
There you go.
So we're going to watch that, and just a heads up on beans. Let's look at a commodity we talked about the last couple weeks, the wild bucking bronco that is nat gas. So we were on this thing earlier this year and caught this, right? Of course, never catch the full thing and never have enough when you catch one of these, but that's the story of being a trader. Then we saw this correction unfolding, and then this crazy, chop we saw for an entire month with a false break and then a move out. Got a big pullback last week that we pointed out, hey, this is a good risk reward spot to buy. You're buying on a full square after a pullback, structurally sitting on top of a month's worth of price action, and we get this big move higher. We broke this one downtrend line. The next move, provided we can take out these highs, is going to be to the full square here at 510, and then the half square here at about 570. It's hard as hell to trade. It's kind of crazy price action, but it moves, right? When you got the setup, it moves. As you can see, we were talking last week about buying in here. Look at the move. So this market is another market that I think is set to move fast in the coming week or the coming weeks, and the direction looks to be higher. Obviously, if we fail and we can't make these, can't exceed these highs, we're just going to chop around some more. So use your levels, use the squares, the levels that are in the spreadsheet. But nat gas still looks good to me. I know we were talking about it earlier in the week, Barrie. What do you think about the close and the price action we saw the last couple of days?
Well, it's encouraging. So I would say, playing it by half square, we really have to hold about that half square.
Yeah.
For it to continue higher.
And this is the support in the spreadsheet, basically, right here. We call this the support.
Otherwise, it's gonna start looking like an old Bitcoin chart.
Right. Anyway, these are the kind of setups we look for, right? You look for a move, a pullback, and then the potential for another move, and that's what's playing out. But we'll see exactly how it's going to play out this week.
So far, it's making higher lows. So let's see how it plays out.
Yeah, everything looks good on it. Now we come to something I wasn't expecting to be talking about, but some commodity shorts, setups in the softs, which are short setups. Different stages, different kinds of setups, but 3 out of the 4 softs I cover, in my opinion, have short setups, sugar being one. On our sugar chart, we've been stuck in this range here for months, 5, 6 months. And we did a false break here, trying to break out of it, sent us back to the bottom of the range. We broke below the range, and I said, this could be trouble. Then we went back up, and now we've come back down again. This to me, and this was an ABC down, we pulled back, made another lower high, and again failed at this really, really important level. And you can see the bar on Friday, the high was right at the level. Could not even get a wick above. Sugar looks like a short. I think worst case scenario, you're going to come down, test this low, maybe false break it, and do something here at the half square. If it's, if the overall trend on a monthly basis is still bullish on all of these softs, by the way, make sure I get that disclaimer out. This is a tactical, sort of shorter term, daily, 4-hour base trade.
It's more of a counter trend trade.
Absolutely. It's a counter trend trade that I think we can take advantage of, especially since it's showing up in multiple markets in these softs, right? Somebody is moving money out of them. Some big fund or institution or somebody's moving money, which is causing this. They're making a call on the softs. You know where your risk reward line is, which is right here. If we settle above 1850, 1852, it's going to be bullish again, or it's just going to be chopping. As long as we stay stuck below it, we're either going to test this half square at 1750, or if it really gets ugly, you're going to go down and around 1650 and test this major support line. This was the level where before we broke out, right in here with the previous highs. So I think the setup is there in sugar. I'm going to be looking to see if, personally, if I can enter this market short this week. What do you think about the setup in sugar?
Well, it's a setup. It's there. Risk is definable, so you have an edge there. I think it's a go. Mm-hmm. But that full square line is the one to watch.
Absolutely.
Or the Friday high, put another way.
This one is a little different. This is cotton. Barrie and I have always talked about, trying to put together methods and systems to be able to catch corners when a lot of our indicators and analysis shows that we are at a good high. That's the situation with cotton. You look at this chart, there is nothing, and I mean nothing bearish about cotton. But the setup from Friday is one where you could potentially get a fast move out of here. And so we're going to be watching to see if this in fact was a false break high, which if you look at it on the lower time frames, you really see how they pushed it up and then slammed it right back down. So the key levels here are the half square, which is at 124.25, and then this full square down here at 118.50, let's call it. As long as we stay below that, and this in turn doesn't just sit around here, but really starts moving out of here, it looks like we have a false break and a good high, and there's going to be some sort of consolidation or correction in cotton. What do you think about the corner setup here in cotton, Barrie?
Two key things to watch would be the half square above and the floor, which would be the full square below. Mm-hmm. And closer you are to the half square, we have resistance up there. And if it ends up proving to be a false break, great. Otherwise, what we really want to see next is that full square being taken out. And that would kind of make the case.
That would seal it. Yep. So this is a little different animal than sugar. Sugar is made its high months ago and pulled back and has done everything that is giving you more evidence. There's less evidence here, but it's another interesting setup. Let's go to the last setup I have, which is coffee. Coffee's sort of halfway between where cotton is and where sugar is. We've made a high. We're making a lower high, pulling back, found support on a half square here. But if this half square goes, we should at least do an ABC down into this support level. And that would be going from roughly 231, 232 down to 212. The setup's there, the lower highs in place. If we take out this support, I feel that there's a decent risk reward trade in shortened coffee here. The other thing that happens if we take out this half square is you take out a trend line from September. So again, all of these commodities are bullish on a long-term basis, on a monthly basis, on a weekly basis. They are bullish. The setups we're talking about are counter trends, and as you can see from the charts, they all have different profiles of risk reward, but they're favorable risk reward trades if you get the proper triggers. Anything else you want to add here on coffee?
No, but I think, if we get through the half square, get to that full square, there's a lot of things there. You have a full square, you got the ABCD, you got the old trend line, and from that same triangle, it supports. So there's a lot of stuff going on at that end of that ABCD. So it makes sense that it would go there if we break down.
Right. And it makes sense that it probably wants to test that.
Exactly.
And if it is some macro call that big money is making that, hey, let's get out of the softs. Right. This is where they would go, right? They would go to support. They'd go to previous highs or the full squares as we marked them. And, it's us being tactical and trying to find these good risk reward setups that make sense. It's a little different presentation this week. I'm sure people weren't expecting it, but I'm trying to show, and we try to show, how we look at the markets and then let the price action and let the charts tell us what the best thing to do is, not based on a bias we have because of what we said last week or last month or last year. It's listening to the charts and saying, okay, is the setup have a favorable risk reward that we can take advantage of? So that's it for me for this week, Barrie. Any other words before we sign off here?
Well, nice coverage. Lots of early heads up. No, I think we're good. We covered everything. We know what to do. We have our levels. We have our numbers. We have the patterns. So
now we just got to see how it plays out.
That's right. Let's go do it next
All right.
week.
Have a good week, everybody. Barrie, have yourself a good week, and we'll talk soon.
Thanks, Ben. Take care.
All right. Bye-bye.
Bye.